and 1. Hi again, Matt Davio back on the podcast. I've got our special guest, Oscar Jofre, with us today. Oscar, are you coming to us from New York, or are you up in Canada today?
Today I am in the wonderful cold weather of Toronto, Ontario, Canada.
I know it well. I grew up in Detroit, so you have the same weather that we used to have there. Just so people know, Oscar, you are one of the top 10 global thought leaders in equity crowdfunding. You're a top 5 influencer in overall fintech. You're involved top 10 blockchain. You're basically in all the spaces that I'm interested in, and I know our listeners are interested in today, which is, I'll call it fintech, which includes, insurance, trading, crypto, blockchain. So let's talk a little bit about this. As we started today, you said, hey, kind of an interesting day. Well, we saw Bitcoin hit, come back to a 5 handle today. Thankfully, it's back to 7s here later in the day. But thanks for coming on today, Oscar. I greatly appreciate it.
Oh, likewise. Thank you. I appreciate it myself.
So, you were talking a little bit. Let's start the conversation with, what's important to you. What are you working on today? What's really shaking in your life? What are the 1 or 2 things that are on the front burner for you that you're thinking about? Can't sleep thinking about them, and what are those key things that are really keeping you up at night?
Well, it's been keeping me up at night for the last 6 years, so but it's coming to fruition now. For me, first of all, I want to thank everybody in the blockchain world, because what they've done, they're going to make those sleepless nights come to fruition, because finally we have the ability to bring something to the market that we already had created and be appreciated and understood. So our goal has been to help companies and to help them better manage themselves so they can start operating differently. So, we talk about blockchain, fintech, insurtech. We talk about all these wonderful technology disruptors in the marketplace. But the vast majority of companies around the world can't take advantage of them because they still operate with pencil and paper and a binder. So it's kind of at odds with each other, because they complain in one sense that they want something, but then when the market actually reacts and brings it to the market, they're not ready. So at KoreConX, we're very, very excited that finally it's been a long path for us for people to understand what we've done, and we're looking forward to the journey.
Well, talk about KoreConX a little bit. It's KoreCon, capital X, just so people got the name. Tell us a little bit about what you offer to people as far as, I know you bring deals, you do investor relations for a lot of people in the blockchain world, and then you also do some portfolio management. So, give our listeners a little flavor of what that means, kind of, because again, I think you brought it on real quickly in the start of the conversation. You said, we've got this old world who is interested in the new technology. And I've had some guests on to talk about this, and they're interested, but probably not until, as one guest said, until it's 9 figures. So how do we get to that scale where, the old boardrooms want to employ and use the new blockchain technologies that are available now and not widely distributed, by the way?
No, agreed. Well, KoreConX, our goal was and still remains to be the all-in-one platform for operating your business. And so what that means is when you start a company, it's divided into 2 parts. There's the operational side, that's your sales and marketing and accounting. That's a very established marketplace. You have the tools and so forth. But what people tend to overlook is the other side, which is the corporate side, where you got senior management, the board of directors, legal counsel, auditors, shareholders, investors, investor relations, corporate secretary, all this ecosystem of participants that are not inside your office, that you often have to share very confidential information about your company in order to conduct the transaction. And often these people are helping you towards another form of transaction, which is either raising capital, selling your company, going public. So KoreConX one platform brings everybody together. And each stakeholder gets to see the same information based on the role they play. And that's a very challenge that most people didn't realize, is that, as a CEO, I look at my cap table one way. If you're a CFO, you'll look at it in a totally different way. From a shareholder perspective, all I care about is my investment in this company.
Right.
And are you reporting to me? So that's what KoreConX does today. And what we're doing for private companies globally is helping them manage that information in a structured way. As well, if they decide to do a security token offering in the marketplace, they can manage their SAFT on our platform prior to issuing their token. And we are moving towards also helping them manage their security tokens. And this is very different than a utility token. So a security token would fall under the Securities Act. So therefore, you would still need to be managing it through your cap table and tracking it. And just because it's on blockchain doesn't make it impossible. It just means that you still need to manage it. Your board needs to understand what's going on with it. So that's what KoreConX is solving in the marketplace. And we're educating the market on how to do it.
And this is the thing that I don't think people understand. You guys are very transparent. Again, I love the transparency about this business. Like, I think, it's definitely the Wild West, but there's people like you, Oscar, that are out there trying to help people really manage, the financing, the M&A work, as you said, distribution of both public and private stock. And those things involve lawyers, they involve accountants, multiple lawyers, multiple accountants. And yes, this is a way that you're able then to really, the CEO might be able to see everything, and me, the employee, is only going to see something that pertains to me.
That's
per
correct.
se. But then I also know as an employee that I have security. I have my documentation all in place. I know that if I ever leave the company, I have a way to take what is mine and what I've earned with me, right? And that's important.
It is. You nailed it. You nailed it. In fact, our investor relations module is just going live right now with our clients. And one of the biggest feedback we're getting from it is, around the world, most of us communicate through our shareholders the old way, using MailChimp or email programs. But with all the privacy laws, if one of those days that particular shareholder decides to say, unsubscribe me, you've now lost that connectivity to them. And so that means you keep emailing, but there's nobody knocking at that door. A year later, it goes down 2 years. That shareholder is now complaining to the regulators. I haven't heard from this company that I invested, $5,000 for, or $10,000, whatever the dollar amount may be. So at KoreConX, you now have a single place of entry to be able to manage all that from a shareholder point of view. You're right, receiving the communication from the company, seeing my holdings, and from the company, be able to know that they are getting it and tracking it in a meaningful manner. So, and you only need to do it once. And I think that's the problem people need to understand, that the reason it costs so much money to do things and why so many people are trying to disrupt the market is because everybody who's ever done it sees the inefficiencies of it. When you go through any transaction, when you see two lawyers in a room, everybody knows it's costing money. And when there's paper in the room and a table, it's even going to cost even more money.
Right. And so this is a great onboarding platform, really, for the securitized side of the business. Again, from raising capital to distributing shares.
That's cool.
So it could be ICO, could be an add-on financial, arrangement where you're raising additional funds, right? You might have had one round of raise, and now you're doing another round. And then everything, I would imagine, in the system, in the dashboard, Oscar, becomes updated. So my 2% share now just became 1% because we took on some more investors, that type of thing. But that's difficult, even with an accounting background, even with a legal background, right? Because as you said, Oscar, we've got to get all those people into a room together. We've got to get them pushing paper. There's fees. And so what you're talking about here is really streamlining the process of onboarding, from if you're acquiring or purchasing, all of this kind of goes away once it's set up one time.
That's correct. And that's when you really see the value, when somebody knocks on your door and says, hey, I want to help sell your company, you don't need to scramble around, call your lawyer. You already have it. And every transaction is already validated one time. So not only is the information entered once, all the information is automatically cross-linked to an individual, an entity, to a document, to a that's the beauty. Once you understand the basics of how everything goes together, it took us years to get there. I mean, it wasn't something overnight, but the genesis of it was I don't want to be in a room where I'm paying a lawyer to do basic, matching documents to subscription agreements, to a shareholder, to a KYC form, which was done 6 years ago, which, once it's done here, it's done. You know what I mean? So that is the cost saving. So, and beyond that is be able to govern your company better, to be able to do more with less. So be able to have a large shareholder base. I mean, we're in the process right now of onboarding clients with an excess of over 20,000 shareholders. So there's one thing having a company with 10 shareholders, let's say 100, but now you got 20,000 of them. Wow.
So you talked about this. I was reading one of your blogs, and you were talking. I used the word, you used it in the title. Wild West of ICOs. Time to move over. Regulated ICOs are coming.
Yes.
Tell people what that means. Like, again, where the market's been, I think you'll know the numbers better than I, but I think there was 1,500 or so public ICOs by the end of last year. And I think we're expecting somewhere in the range of 3,000 by the end of this year, 5,000 by the end of next year.
Well, actually, it is interesting because now we're starting to see some true numbers. We're lucky that we're talking today because the SEC just indicated they viewed 3,500. So we're all at awe that there were that many. So that just goes to show you how many weren't being tracked and still were able to raise money. So
So that means 3,500 companies have said, here's our information to the SEC? Is that what you're saying?
No, it just means that they found 3,500.
I see.
Of the 3,500, they, as the chairman of the SEC indicated, he sees kind of security. So, but first, I think that, what I like to start with is what is ICO? Initial coin offering, coin being a currency. And what should be noted is that, a vast majority, 98% or more of them, were not actually coins. They were actual tokens. And this is where the confusion in the market has occurred. On this token offering, everybody's going tokenomic frenzy. And so in the token world, there are two different types of token. The utility token, which is the token that you can use in your network where people, they play games and you reward them with a token. Okay, and I get that. It never leaves your environment. That's a perfect utility. The problem is that utility tokens were being sold like a security token where people are being promised gains of 2,000, 4,000, and with the other promised land that it would trade on a secondary exchange. Well, you and I both know as soon as you use words like that, that is day-and-day security token. So I call it the Wild Wild West of ICOs is finished. In fact, today I just said it, the death of ICO and the rise of TAO, tokenized asset offering. So what that means is that any tokens are a valid instrument to be used. And all I'm really saying, or most of us are saying, is that use the securities exemptions available to you. It doesn't have to be an equity up instrument, but it needs to be a purchase by somebody under some exemption. You do that, no SEC, nobody, no regulator will actually come down on you. But like anything else, but I don't want to say that it wasn't all bad. In fact, what ICOs did is something that in crowdfunding we never accomplished. 6 years ago, many people worked hard. People like Douglas Elinoff, Sherwood Neese, Jason Best, and many others in the United States creating the Jobs Act. And they worked so hard, years, to get Barack Obama to pass it and put them into active exemptions. But they were limited, and we were never able to demonstrate whether somebody in New Zealand would invest in somebody in Virginia just by simply looking at the opportunity online. We never were able to prove that. ICOs did. And what's really fundamental about that is, you and I started talking, it's the technology what's driving all this, and that's blockchain. Blockchain brings something that we never had before: trust. Trust, trust, trust. Why? Because we know that once the information is on the blockchain, it's not something that people can erase you. It's permanent. It's there.
Yeah, so
So
talk about that a little bit, maybe for people, just so they understand, because I think crowdfunding was just kind of getting mainstream, I would say, recently, and
yes,
I always wondered, people were building the new skateboards and the new drones, all these little gadgets and tools and everything, and it was cool. And they were trying to raise $50,000, $100,000, Indiegogo, all these things, right?
yes.
But now we're talking about really software, in many cases, software and infrastructure entities that are employing. Can you give us like an average profile of if you were to look at the ICO world that of that's come public, how many employees, what kind of raise are we looking at average? What is typical in this world?
So if we look at back at 2017, the average raise was over $15 million US. So 1.5, yeah, that's a big number.
That is
And
a
when you
big number.
consider that an early stage startup always only raises 1.5 million. So the numbers are very, big comparison change. The other element that you asked, a very important question, this has been what's always disturbed me about the ICOs, and which they could have done better because they kept professing self-regulation, which I'm in favor of that if you can actually make it come through, which was, you asked how many employees do they have. So you would go to their website and they would show you like 100 people.
Right.
But out of the 100, 99 were all advisors who were being paid coins to promote. So there was only one guy, and God knows where that was. And here's an interesting thing. Of the 254 ICOs that I did look, only 3 of them had physical addresses on their website. 3. But again, that just going back to what I was saying earlier, the reason people invested or purchased is because they trusted blockchain. See, that is a mindset that we never had in crowdfunding. That's why crowdfunding never took off. We thought it was, and we did everything we could, but blockchain really brought it to light. And now the irony of this, as I talk to my colleagues from Lead Days of the Jobs Act, we're back. The same platforms in the United States and other jurisdictions that have been using crowdfunding exemptions to operate are now selling security tokens, and they're selling them in speeds that they haven't seen before in equity. So it just goes to show you that the same investor in their platform would prefer to buy a token than an equity position in a company, because they know of the liquidity element that is available to them that typically in a normal security isn't there. So,
well, I mean, that's it right there, right? You're talking about a private investment, typically, that most private investments have zero liquidity. If zero.
If zero, that's a great point. And that's where I'm highlighting it to people. That's why people are willing to forgo voting rights and equity for that token, because now there will be secondary markets like T0 and others coming out. Start Engine in California has already started, where non-accredited investors can buy tokens. This is all within the United States, but the point is we're starting. So it's almost like crowdfunding version 4.0 is now back on.
But let me ask you, I've always wondered this, and honestly, I don't know. Are you supposed to be accredited with every ICO? Are you supposed to be?
No, actually, for every security token offering, you in the United States, it's the only country that actually offers you 2 choices. So you can either use the accredited investor exemption, which is the best one because that one gives you the global perspective. You can go to global accredited. Yeah. But if you go to the non-accredited, you are restricted to the confinement of the United States. But you still got 233 million people, Americans, that have the opportunity to invest.
Do you guys help the companies that are coming to market with these tokens prove the validity of the accredited nature of the investor?
Yes. So our second part of our technology, which is operated by broker dealers, goes through the KYC, ID verification, investor accreditation, AML,
Right.
through, I mean, we're talking the real requirements, not the Oscar Jofre, Toronto. That's not KYC.
No, I mean, I've raised money for my own hedge fund, and I had to only speak with accredited investors. I had to have them sign something. I had to keep, records of that, and it was a lot. And I surely didn't have 20,000 investors because my minimum was probably $250,000. So
yes, exactly.
It's so like you mentioned you had a customer that has 10,000 investors. So in that situation, they're obviously not all accredited, right?
No, in that scenario, most of them are non-accredited because they're using an exemption in the United States called Reg A+. You're going to hear a lot about this particular exemption. Start Engine, platforms like Bankroll, and many others are using this exemption to help companies, Canadian or American, they're the only ones that can use this exemption to raise capital through non-accredited investors. And here's the good part about this, Dave, is that investor buys that token, gets that token. They can go to a secondary market that trades Reg A+ tokens and trade it immediately. So if for whatever reason your life changes where you don't feel you want to stick around, but you don't have to go through the process of trying to go back to the company and all that, it's written in the smart contract within the token that you acquired. So the technology element is one part, the smart contract is the other, to protect the company, to make sure that at all times it's being sold within the limitations that the exemption allows. But a company can, as it can in a regular equity, sell tokens under to the accredited and sell tokens to non-accredited. The accredited have the ability to trade their tokens anywhere in the world where a security token exchange exists. So,
what are your thoughts on the attraction, obviously, with blockchain is decentralized, right? We're not backed by the good faith of any government, as far as the currency side of the thing. And really, it's the same for, for anything blockchain related, right? It's a computer program that is improved upon, and as you said, there's a trail always. That all makes sense. But what about in the aftermarket, right? I mean, I'm a trader. I've been trading for 28 years. And I have traded some of the major Bitcoins. I would love to be more involved with some of the smaller ones as a trader. Okay, I can do that and be very, very good at what I do. But the problem I find as a participant in markets is, where do I trade? Like, how do I take advantage of these opportunities? I was looking at Komodo yesterday, and I was like, I would love to buy this at 250 again. And there's only so many places I can do it, and I don't have an account, like, one or two of them. I'm just making up a scenario. So, and then Komodo goes from 250 to 350 today. Man, that's a for me,
that's a jump.
That's not quite 50%, but darn close. I can do math.
Yes.
My question is, Oscar, regulation, and I've also talked to some people. What do you think about centralized exchanges? I know some people that are working with the SEC, trying to say, hey, we see this problem. We see that there are participants willing to trade on the secondary market. Once on your side, you've helped companies comply, raise their money, etc. Then, are you also helping them, pushing them or suggesting some options when it comes to exchanges?
The good thing is that the groups of people that started the first exchanges, obviously they're all angry and all that because they're being shut down. But on the other side there is an active community that knows what it takes to launch an exchange. Those dialogues have already started long ago. They foresaw that this was coming. So I think in the next quarter or so, if not less, you're going to see brand new exchanges appearing, or some of them acquiring some of the known exchanges, but putting a regulatory underneath it. because that's how you bring stability. I mean, if you want ETFs, everybody wants that in the United States and they want it everywhere. But in order to get that, there are certain rules that investment funds need to follow. There needs to be transparency. There needs to be, where did that money come from? Otherwise, we're going to be back to where we were before, and then the markets are going to collapse, and nobody wants that. So
right.
I think that's the direction we're moving. I believe, I hope that the industry as a whole has learned from this. I don't think that what they've done is 100% bad or anything like that, but I think what they've now gotten, there's a way to do this business, but let's follow the reg. And as time goes by, I do believe that you can slowly start making changes by demonstrating that the technology itself could have handled these things. One thing is saying that the technology could eliminate you. Another one is saying, watch how the technology works while your person is there. But guess what? We don't need them there anymore. That's a different story, right? And I think the approach by many out there in the early days was, I attended events where people would say, we need to kill the regulators because they're useless, they're out there, they don't know anything. And I'm saying, well, wait a minute, they've been entrusted for this job. They have very particular rules they have to follow. That means that what you're asking to do is not just break down the securities law, but you're asking them to break every other law that actually put them where they are. That's going to take a little bit of time. I do see it moving fast, but I think they need to be working in conjunction. So for those individuals out there that have the brains and the expertise and have the ability to communicate that messaging are going to do extremely well with regulators, because regulators do want change, but they need to understand that that change is a positive and it has the ability for them to still continue having rules that they have. Because that's really what blockchain does. It's actually embedded regulatory rules where you don't need a human being to double check it, but they need to make sure that it is being done. And it is
right. Again, once it's coded, once it's written, then we don't need the oversight. And
exactly.
And that's where I do get excited about it, because I think that really brings even more transparency, even more liquidity, trust to the markets. I will tell you, people, it's very interesting that Bitcoin, came public on the Chicago exchanges. And that I could have told you this was going to happen, just because I know in my heart this is how markets work. And it doesn't mean the end of times at all, right? From a trading perspective, it was opportunistic, right? I could have now I don't need to own it. I can sell futures and I can ride it all the way down, and that's fine. Now, however, I think you're getting to that point where it's beyond that. I'm not just talking about trading. And where I see the opportunity is there's so much money out there, there's nowhere for it to go. And I was going to use the U.S. stock market over the last 5 days. We've come off 13%, which was honestly, Oscar, I don't know which, I tweeted this out today. I said, I don't know which market is more illiquid right now.
That's a good point, yes.
And the way they moved was almost similar. I mean, and I'm a market structure guy, so I look at the reason why the U.S. markets have been going. People, many people say taxes, many people say Trump, many people say, business is good, earnings are great, all these fundamental things. I also think there's an invisible hand piece in there that's been propping it up. Whatever that means to you, it might mean something to me, but anyways, you start factoring all these things in, but then you look at the structure of both of these markets at the same time, basically within, weeks. Very, very illiquid, both the crypto world and the U.S., S&P 500. I mean, in 28 years, I don't think I've ever seen, I was watching the Dow yesterday. It was down. I was doing an interview like this, and I'm in a position that went from down 500 to down 16 in about 15 minutes, 1,600, and then back to down 800. And I was like, that's looking just like, Bitcoin trades.
Exactly, yes. Yeah, exactly. Either one, you could.
With greater margin risk on the U.S. equities.
Yes, agreed. Agreed.
So, especially with a lot of these volatility products, I mean, people have just been slaughtered, right? Today, I mean, that's where people have gotten killed, and there's been warnings out there. But so coming back to it, so let me ask you kind of a broader macro question. When you look at all these technologies that are utilizing blockchain, give us one or two that you are personally, that you see technology that will change the course of humanity. How's that? I'll just leave that open to you. You can answer it any way you want.
Yeah, I mean, obviously, I'm following blockchain in great depth because I see it how it's going to transform our company. But I see it at the moment. We're going to see a lot of the same type of company doing the same, because one thing that most people don't realize is that two different types of blockchains don't speak to each other. Therefore, it's a competing factor, whether one builds it on Hyperledger, one builds it on Ethereum or Stellar or EOS. They could all be doing the same thing and doing it well, but only one will eventually be the winner, which we don't know yet. But
which is no different than Microsoft versus, any other programming language at the time, right? You can look at that as the same thing. He didn't invent DOS or BASIC, but he used what he saw as an opportunity and took advantage of it.
Exactly, and we're doing the same thing as our company. So I believe there's going to be some really game changer technologies, both in private capital markets and both on the publicly listed markets. So digital assets led by Blith Masters what they're doing is groundbreaking. They are fundamentally changing the capital markets inside out. And that's an approach which I think people should. She's quiet. I mean, she's not arrogant. She understands the problems. She worked at the big houses. So and the approach they're taking to fix the problem is working within the industry, because they know that it doesn't change overnight. And slowly now they're inside the Australian Stock Exchange. So that's one company on the capital market side. There's some other companies I'm following with what I call fragmented applications, like Sovereign, which has got an identity kind of own your own identity environment. But a game changer for me is what Estonia did for the ID passport. I mean,
yeah, that's been out there for a while too.
Exactly.
Talk about that a little bit. I mean, it's funny because I've talked to other traders. They're like, "Hey, we should get a citizenship, citizenship in Estonia." I'm like, "What does that look like?"
When Estonia first came out with their passport over 5 years ago, nobody really knew anything about blockchain or why they would do this, but the whole idea was to have a global identity and to be able to do things. At that time, you couldn't really do anything with it. It was a novelty, get it, and there you go. Today, the Estonia e-passport you can use to open bank accounts in the UK and the European Union. So imagine one ID to identify who you are, and it's completely authenticated on the blockchain. So that's another great example of using blockchain to really solve a problem that all of us have, where we go open a bank account, we got to bring all this paperwork. Now you only bring your Estonia global passport, and away you go. Another one that I'm following, they really haven't got a name yet, but I really like the disturbance of it, is to disrupt real estate. Real estate is one that we all talk about. We've read many white papers on it. A lot of them really never come to fruition. But this one, I believe, has legs, partly because it has executives that came from the real estate market who understand it right from the government side, right down to the realtor, to the real estate market, and understanding all the complexities. And what this is meant to solve, and I believe it's been done in other countries around the world, but it's been done in a very small area. But this is meant to solve the issue of how do we buy homes online in a trusted manner without having an agent. This is very
without having to pay a 6% fee, right? I mean,
thank you. No fees.
I mean, I'm blown away. Excuse me. And I was just talking to a friend who was a realtor. He's like, "Listen, I know my business is dying." I'm like, "I'm blown away still today." When you look at stock brokerages, they used to be the same way, right? For you to trade, it cost you $200 just to put on a trade. Now it's free. you know, the way that travel agents used to be so big, and now you and I can book our own flights easily. We have plenty of choice, opportunity, and there's still room to be squeezed margin out of there, obviously. But the margin that's available to be squeezed in real estate is ridiculous. And the illiquidity of real estate, I think real estate would benefit if we truly had liquid markets, right? If we were truly able to say, buy and sell today, bid ask today. Like, that doesn't exist, and it's never existed even in commercial real estate.
No, agreed. And in the residential, as you know, different parts of the countries, they're experiencing high prices on real estate, and there's some shady background. People saying, oh, there's another bid, but you really don't know. So you think you got to outbid the other bid, but in the end of the day, it's just two brokers working with each other so to split the commissions. So I see that as a major disruptor. And obviously, I don't like to toot my own horn, but us at KoreConX with our private capital markets environment, that we're not only are we bringing the solution to the company, but the capital markets environment where broker dealers can operate a white label and then a secondary exchange for the trading. All of this on a blockchain, and all of it is to solve the issue of how do I run my business when I need to get capital, I need to do an M&A, or I need to go public, because that's really the life of company. We operate, we do certain things, but we need to do it more efficiently, and we can't just go by the transaction element. You got to follow the entire life of it. Yep. So that's what we have built, and we're very excited. We're going to launch our security token, Core token, in this year, and it will be. It'll have a utility element, but it will be sold as a security token to accredited investors in a number of jurisdictions, which we haven't finalized on. So, but it is exciting. I do see.
So, Oscar, where can people, if they want to listen to you, are you tweeting? Are you on Twitter? I always like to ask, are you on Twitter?
Where I'm spending most of my time? I do spend a little bit of time on Twitter. Most of it is LinkedIn. And here's why. I know people go to Telegram. Well, I tell you why I go to Telegram. I went there under my real name, with my real phone. So I'm a real person, Oscar Jofre. You Google my name, you'll find my Twitter, Facebook, and everything. When I went to Telegram, everybody's using all these names that you don't know who you're talking to. Right. LinkedIn is really great. We can have meaningful discussions. You can ask me anything. I'm very transparent. You may be wondering, I'm about to launch an ICO. Should I be doing it? So here's one thing I will leave you with everybody for today. Take the word ICO out of your acronym. Take it out of your website. And the reason for that, because now that Facebook has banned ICOs from their website, it's been tainted. The word, you won't even be able to advertise on Google AdWords or LinkedIn. So the time now is really to start changing your vocabulary. There is, if you have a true utility token, it will be an initial token offering. But if you're doing a security token, you will use a proper term for it. Otherwise, you won't be able to advertise. And people go, well, I'll tell them it's a security token, but they're going to go to your site and see the word ICO. And by the way, you don't want ICO because you don't want regulators looking at your stuff when you're not an ICO. So that pile has unfortunately been burned very badly.
Yeah, no, it's clear as day, and I think that's good advice that you're giving those that are trying to raise money the right way.
Yes, so, especially today.
Yeah. So for Oscar Jofre, KoreConX, it's KoreConX.com, I believe. And again, you can find Oscar on LinkedIn and search him on Twitter. I am Matt Davio. Thanks again for listening today. And Oscar, I appreciate you coming on and spending some time with us.
It was fun. Thank you, Davio.